we saw is Friday when the equity market sold off, you got this nasty candle. It did close below this channel. So look at the beauty of this channel here, how we've been hovering up and down inside of it really since June. But the negative here is that we saw a close below. Now you haven't confirmed, but as far as I'm concerned, this is a very, very nasty little pattern formation. And it's likely we're going to go retest this yellow trend line here, which happens to be the high from 2017 right here. That's going to be a big line in the sand. If we break that, then you see that move down that I've been calling for as my secondary target. You know, my first target was 20,000. We talked about it last year in Dubai when I was there in October 2021. We said 20,000. Now I say it's going to actually go lower than that. Next stop is going to be 12 to 13,000. So we are headed lower, and it's going to be a rough road along the ways here. You know, from the drop from 69 to 21 and change, if it's only got another really about 9,000 to go, that's not that crazy. I agree. I'm a big long-term bull. I'm just a shorter-term macro economist looking at the cycles and everything like that. So the beauty of 12 to 13,000, it gets us to that 80 to 85% correction that Bitcoin has done every single cycle. So that kind of gives us a basis of what to look for. It's also a strong technical support. But you're right. I mean, if you're a long-term investor and you're not going to look at it for 10 years or 5 years, there's nothing wrong with that. You just have to, this is the key, right? You have to be able to weather the emotional storm, because I know a lot of investors out there, they might buy in at 22 or 21, and when they're down 40% at 12, they might panic and unload, because you're going to hear a lot of negativity out there. And if you have to be able to control that and shut it out, and then you're okay to do that. But if you're someone who's very emotional and you're going to exit the trade at that point, and then it goes to 50,000, then 100,000, that's not a good scenario for you to be in. So if you have emotional control, that's fine. Start inching in. I also advocate for dollar cost averaging. Buy a little here at 21, buy a little bit more at 18, buy some more at 15, and so forth, versus just going all in at one specific level. I don't think so, not at this stage of Bitcoin's life cycle. I think down the line, you will see a kind of a difference, and Bitcoin and the crypto market start to emerge. But right now, it is tied to a risk asset. I know a lot of people said in 2021, oh, it has nothing to do with the stock market. It'll go up when inflation goes up and the markets sell off. We obviously learned that that wasn't the case. So I'm in the camp that we're going to see crypto sell off with the stock market. I have a big downside move coming later this year in the stock market, and that's going to be the catalyst to really take us to that 12, 13,000 marker on Bitcoin. And I actually think that Ethereum is very likely going to head down to this next target around $645. So I have it priced in. That should be the level that Ethereum hits when Bitcoin hits 12 to 13,000.
How did you come up with that yellow line?
Key major support. It was the beginning of the big bull market. This would be 100% retrace to the start of that bull market. Major support right here as well. There might be a lot of hype around the merge that could drive it higher, but I'm not necessarily anticipating that. But you have to calculate that into your risk assessment when you're looking at Ethereum here. I mean, you can see over here when we broke lower, we came back just shy of the 200 right there. So it is possible, just like Bitcoin. Like if we go to the Bitcoin chart, you can see here we haven't even come close to the 200 on Bitcoin, which is kind of sad to think, right? I mean, it hasn't even come close at all. But you can see right here, it did hit the 200 before that next cycle to the downside. The problem here on the Bitcoin chart is that this was a very defined bearish pattern, and now you're below it. So that is problematic. Now, again, we have to hold this 19.6, 19.5 level, which is that key level from 2017. Otherwise, again, we should be heading very, very quickly. And again, just watch the stock market. I strongly encourage everyone to just keep an eye on the stock market. That is going to be your indicator. If this continues and we continue to see this fall on the S&P, I don't believe that the crypto markets can withstand that. But this is again a fear of the Fed not backing off. We got the minutes last week from the Federal Reserve meeting. That kind of was the end of the move. Right into those minutes are when we touched the 200 moving average, which was the technical resistance level. And then as soon as we heard from the Fed, it didn't seem as they were as dovish as the market wanted. And we've seen the dollar just soar here. Take a look at the DXY chart. Let me punch that in here. And we've seen the dollar basically up to a double top up here. But look at the run on the dollar basically since that move from the Fed or since the minutes came out. And that is putting major pressure. The stock market does not like a strong dollar. It wants a stable or slightly weaker dollar. And that, again, is problematic here for the market. So as long as the dollar is going higher, it's telling you that, again, investors are moving away from stocks. And that's why we're seeing the selling that we're seeing. If you sell in terms of yen or euros, and then you convert it back, right? So you're taking in yen or euros, and between that period of the conversion back into dollars, the dollar strengthens. So you're actually getting less out of it. And we've seen even stocks like IBM, companies like IBM, they took a $3 billion hit because of the currency issues here. So it's kind of wacky how that's working right now, but it is definitely a headwind. And I think it's important to understand, what does a strong dollar mean? It means people are going into the US dollar for safety. And what they're doing here is they're saying, all right, the Fed is going to drive us into recession. And therefore, and they're not lightening up, even though we know the economy is weakening per economic data. And so they're hiding in the dollar. They're selling risk assets that might be affected by a weaker economy. And that, again, is a kind of an issue that the markets are very freaked out about right now. I actually think the dollar is near the end of its run. If we go to your weekly chart here, I still have these two trend lines, which we're now retesting. You've got a double top in this vicinity. So I'm actually in the camp that in the near term here, we're going to start to see the dollar roll back over. It's way too short-term extended. I've loaded up on some gold recently, on some gold miners recently. Newmont mining is looking very, very attractive down here. So again, we can see, look at Newmont in terms of this. Let me get rid of the 200 moving average. But look at this channel on Newmont here, this pivot here all the way up, and then this pivot on the bottom just connected through. And look at what we touched on Newmont at the lows today, right at that level. So that's a good level, in my opinion, on Newmont mining. And again, gold, kind of the same thing. We had this nice move up recently on gold, and now it's retracing back in. Let me go to the daily chart. You can see right here, the move above this downsloping trend line. So you had a short-term breakout. Then you're retracing to the scene of the crime. Now we have to see if it can bounce off of this. I think gold does. I think, again, you're going to see the metals start to really perform here over the next couple of weeks. You know, to me, I see further downside in Bitcoin. I think that the stock market is going to make new lows this year. And again, that's saying something, because we've had a huge bounce on the S&P. So by end of year, I'm actually saying that we will take out these lows down here at around 3,600 on the S&P, 3,500. And we actually should go even lower than that. So it's going to get nasty towards the end of the year as the economy, or as investors start to recognize that the Fed is not going to come to the rescue of a recession. I think the next jobs number is going to be a lot weaker. We're going to start to see that weakness filtering into the jobs number, which is a kind of a delayed reaction, as we know, economically. And that is going to make the markets very, very scared, with inflation not coming down even more. I'll even make a bolder call for you today. I say that the stock market has made the highs of 2021. We will not take those highs out for 5 to 10 years. The fundamental side is basically that you're going to have this genie that's out of the bottle named inflation. It's not going to go back to 2% or under for a long, long time. That's going to mean that the Federal Reserve is not going to be able to print us out of the future recessions that are going to come, especially this next one. And therefore, you're going to have this market and this economy that's mired in more of a stagflation period. So slightly higher inflation, but really no growth to speak of. And it's going to last for years, because remember, the Fed has printed us out of every recession, probably for the last 20 years at this point, and they've pulled forward so much of the gains. If we go to the daily chart, in fact, let's go to the monthly chart. Look at the monthly chart on the SPY here, or the S&P 500. This is basically, here's 2009. This is the Fed printing of money. Does that look normal to anyone? It is ridiculous. They were pulling forward so much of the upside in this market. It's going to take us at least 10 years to digest. The only other thing that was semi like this is the QQQ going back to 2000, when we had that same vertical move. Well, guess what? It took over 10 years for the NASDAQ to break through those highs. So you're going to have this digestion period. Let's take a look at the Hang Seng here. I want to show this because it's super, super important. So think about this, and we go to the Hang Seng here. Here you have the monthly chart. The Hang Seng currently is still trading at levels that were seen back in 2006 and close to levels seen in the 2000s. So if you look at that, the high of 2000, we basically just touched it on the Hang Seng market right here. This has been mired in a sideways chop move for the last really 10 to 20 years. the US markets, first of all, look at the vertical move that occurred here. And from 2003 to 2007, it's almost a replication of what we've seen in the US markets. And look at how long it's taken to digest that move from the Hang Seng. And if we go to the EWZ, much the same thing here. Look at that chart, 2003 and the vertical move up to 2008. And look at the digestion. I think you're going to get a breakout on the Brazilian stock market, a breakout on the Hang Seng, and the US markets will now go into that same sort of longer term consolidation pattern that we've seen in these markets for the last 10, 20 years. So number one is you're going to have to be a little bit more of a stock picker. So there will be stocks, and just like in any bear market, in a consolidation period, there's going to be the winners and the losers. I think you want to stay away from the indexes themselves, and you need to start looking and seeing what's the new technology. What's a stock that has a good dividend, for instance, something that can pay out over time and make you money when it goes sideways. And I also think people need to be careful, but look at foreign markets. Foreign markets have been underinvested in by hedge fund managers for long periods of time. And I think that's the play to go with here. Plus gold, eventually Bitcoin. Once Bitcoin's down in those lower teens, I think a little bit of the portfolio in the Bitcoin market, it makes a lot of sense. Like I always say, there's always a bull market somewhere. It's just up to us to find it. And it's just going to be a little bit harder for the next 5-10 years to be, kind of just close your eyes, throw a dart, and just make money endlessly.
Yeah. That's it for today, guys. If you found this video useful, then don't forget to like the video and share this knowledge with your friends and family. And don't forget to check out the full video, link is in the description. Thank you.